everyone, and welcome back to Talks with Todd the Lender. I'm so excited to be doing our very first video together for 2021. We're in a new year. We have a new administration in office for our presidency. We are rounding off the first month of 2021, and what better way to round it off than to do a quick Talks with Todd the Lender. So without further ado, here is Todd. Todd, take it away. Tell us what's been going on.
Oh, everything's been going on. You know, we started out the new year with the new administration, like you said. They decided to hire this lady named Janet Yellen. Janet Yellen's actually from the Obama administration, so we have some history with her. She used to be the Fed chief. Now she's the Treasury secretary. And she's got a very, we'll call it, in-depth history of liking to spend her way out of things. So what does spending her way out of things, how does that translate into what we care about, which is home loans and selling houses? What that does is it creates a panic of inflation. And what inflation does is it sets in a fear that the Fed will end up raising their interest rates. So the first actual couple of weeks of the year, we got ran on in our interest rates like pretty crappy. Like we had 1 week straight where the rates got worse every single day.
Wow.
To the tune of 100 basis points, which that's roughly 1%. It wasn't a full 1% as far as rate goes. It was 1% in cost. So that ended up translating to about 3/8 in interest rate. So not too bad. And what I tell people is, I'm like, look, when rates are 2 1/4 and they go up 3/8, you're at 2.625. Like, who cares? Rates are
that's still an amazing rate.
Yeah, and so that kind of leads into the next part, which is stocks are also what are considered oversold. The stock market's been at a record high for a while now. Once it's oversold, it puts you in a bearish market. And a bearish market is people are going to tend to look at selling because you want to sell at the highest point. They're saying that we're kind of at that limit right now. So we've been seeing the market sold off today. We had a sell off today, nothing major, but a sell off nonetheless. Over the last, I'm going to say probably a week, we've got most of that 100 basis points back. We've got 75 of the 100 back. So the market's returning back to where it was based on what the stock market's doing, not so much about who's in office or any of that garbage. Anybody that might be watching this, that's watching the stock market, if you want to look at the indicators really quick as far as what you're seeing as inflation, look at Bitcoin, look at gold, look at silver. Those are all things that tend to increase when inflation could be an issue, because inflation means the dollar is cheap. The dollar is cheap. You want tangible stuff like gold, silver, and Bitcoin. Bitcoin in the last 2 months has gone up like 300%. I mean, it's gone up from 10,000 a coin to 30 something thousand. It's been as high as almost 40,000 a coin. So it was crazy high. So that's what we've been dealing with as far as my world, my language, my love language, if you will, in watching all of the rates and what that's doing. I've got clients that are refinancing. I just let the rates expire, which people thought I was nuts. But again, our rates, they're kind of like a rubber band. They're going to stretch and then they're going to relax. They're going to stretch and they're going to relax. They can only stretch so far. The one I let expire here recently, after a week, we got it all back and actually then some, put them in a better position. So that worked out well for them. The outlook going forward, we also have, and we talked about this, I believe, in the last Talks with Todd, we have just basic economics also, which is supply and demand. So we have high demand, low supply. That's going to keep prices going up. That's going to keep people out there looking. It's also going to help to keep rates probably at bay for a little while. But again, if we're on an FHA loan and we're in the low 2s, so if rates go up 2%, like, are people going to be pissed that they've got a 4.25? No, 4.25 is still a great rate. People are still going to buy houses. People watching this are still going to want to buy a house at 4 1/4. However, with that said, it's in the low twos now. So get off the fence and go buy a house if you're wanting to buy a house right now. There are houses out there. Victoria is amazing and she will find you that right house. And there is literally no better time to buy it than right now. So that's kind of my, I would say the next quarter anyways, the next couple of months. We're probably going to see this dance a little bit in the interest rate world, but nothing, I'm not seeing anything super major. Obviously, if I see something, I'll get right back on here and get that word out there.
Awesome. Wow. Okay. Lots of information to take in. We still, like you said, we have low supply. Our inventory is still low, but the demand's high. And as you mentioned, the rates being as low as they are, obviously jump on that now. But if they do go up a little bit, you're still at a great rate comparing to history and to, you know, even a few years back. So I think it's still going to be an amazing time to buy this whole year. As you said, unless anything changes, and then we'll get back on and talk about it. But I think this is definitely a great time to be a buyer. So yeah, no, that's really good information. I think right now, a lot of people are mostly asking me about the new presidency and how that's going to affect rates and how that's going to affect, you know, just overall the housing market. So that's why I really wanted to get on here in this month and do this and have this talk so I could have you answer those questions and kind of talk about what has changed, what's influencing and what's not influencing, because there's a lot of information out there that's wrong. So I do also like you to debunk a lot of that, because I don't want people to be relying on sources that don't actually have the right information.
Yeah, there's literally every day. I mean, I know like the housing stats that get put up on like CNBC Business, completely wrong. Completely wrong. You know, they're talking about how the real estate market's overbought. How can it be overbought? We don't have any houses to buy. You know, so there's definitely a lot of people out there that claim to be a whole lot smarter than what they are, because they're not looking at the real time numbers. They're not looking at what that number that they're interpreting. They don't understand what's driving that number. You know, if we see a change in oil prices, which we're probably going to, that's going to affect our market. You know, but nobody talks about that. It's all housing prices. They think it's all driven around housing prices. Housing prices right now is driven by supply and demand, plain and simple. It is not driven by anything else in the market. So once we have more supply, if and when we have more supply, then yeah, if we see changes in oil and things like that, and that starts to affect rate and it slows down people's willingness to purchase, supply will go up. That will slow down the price and so on and so forth. But right now, there's just no slowing it down. Oil, and this is just my personal opinion, if I'm looking at the markets as a whole, oil is probably going to be the first thing that gets hiccuped into the system that causes a little bit of maybe a change in our outlook on rate. The other thing too is we have a new chair of the CFPB, which is the Consumer Financial Protection Bureau. And this individual is known for loving restrictions. That could change my world, where we have stricter guidelines. I definitely don't see guidelines getting easier. I heard a great saying. Do you know what the definition of insanity is?
No.
You don't know the definition of insanity?
I don't think so.
Well, typically it is doing the same thing over and over, expecting a different result. Well, right now, the definition of insanity is a loan officer trying to get a self-employed borrower while in COVID. So, you know, we are all racking our brains because this guideline that we had to get hit with, it was something that got done in 2 months. Those guidelines normally take over a year to put together by Fannie Mae and Freddie Mac. They did it in 2 months.
Wow.
So there's a lot of things about it that don't really make a lot of sense, but they had to do something. Mm-hmm. You know, so we're living in that world, and I don't really see any changes guideline wise until COVID's over. I mean, that's obviously that's the big white elephant in the room, right? Is COVID. Once COVID changes, a lot of stuff could change, but we don't know when, we don't know what, and honestly, we don't know how. So we have to wait for that to happen. So it's just, as a whole right now, we just have to live with basic economics, which is so great. It's so much better than what we lived through in 2006, 2007, when the market burst because of something that was out of our control. Now it's totally, we can forecast it now. I mean, these are all things that are that have guidelines to them is because of basic economics with supply and demand. It's like real world. It's not this fairy tale that we were living in back then. And I think that's everybody's biggest fear right now is, are we going to relive that? And I would most definitely say, no, we're not. Just like we saw the interest rates go up 2 weeks ago, it wasn't a half a the last election in 2016, we saw interest rates go up 0.5% in one day. We saw 3/8 over a week. So that's where I tell people the bubble probably won't burst. It may just start to deflate. That's my analogy on that, or my metaphor. So that's what I would expect. But I just don't see it happening anytime soon. This train's it's runaway right now, and if you're wanting to buy a house again, you gotta jump on this train and take advantage of it.
Yeah, I mean, because one thing I'm also telling buyers right now is, at a rate that's 2.25, even up to 3, you will probably never refinance. And, that's a big deal, being able to know whether it's your forever home or not, knowing that you can have that property and not have to consider refinancing at any point in time of ownership. I mean, that's such a big deal. Typically with refinancing, what's the percentage of the cost, or like closing costs, for a refinance?
So it depends. Just actually had this question asked me about an hour ago, and the majority of your cost comes with impounding your taxes and insurance. On a refinance, the beauty of that is you already have an impound account on your other loan, so you're going to get money back when it closes. And if it's really something you want to do, you can just take that money and make a principal reduction on the new loan, and you're fine. Other than that, you're talking, $3,000 to $5,000 for closing costs, depending on loan amount. Obviously, it's all going to vary. If it's $1 million loan, it's going to be more. But if it's a $200,000 loan, it's not going to be much at all. But right now, with what we're doing, lowering people's interest rates into the twos, I mean, we're seeing people save anywhere from $200 a month to $700 a month.
Wow.
And you recoup that money in a few months, and you're good to go.
Right.
But I mean, let's say you do an FHA refinance and you're in the low to mid twos. Literally, almost every payment you're making is going to principal, like almost the whole payment. It's just, we've never seen anything like this before, and especially we haven't seen anything this for a period of time like this. I mean, we're like, at this interest rate, we're like 6 months now, maybe a little bit more, that we've had these super crazy low rates. I mean, rates have been in the low to mid threes since March of last year. So we're almost a year of having these crazy low interest rates. So it's definitely something that if you've got a mortgage or you're wanting a mortgage, like you said, you may never have to refinance again, and you can sleep well knowing that almost every single time you make a payment, almost all of it's going to principal. I mean, you're just not paying much in interest over a 30-year period of time. So it's pretty cool to be able to help people with that.
That's amazing. Yeah. Thank you so much for putting that in perspective, because that's something I've been telling my clients. I let them know you'll most likely never have to refinance. And there are benefits to doing that right now, because you want to get your interest lower than most likely the 4, 5, 6s. So saving someone $700 a month, absolutely worth it. But that's a huge benefit to purchasing right now, is that low rate. So I'm glad to hear that we got a little bit of insight about the new administration, new year, kind of forecasting a little bit. So what I'm going to probably be doing for all of our viewers out there is we'll probably do a Talks with Todd the Lender once a month. And obviously in between those talks, if anything comes up, we'll get on here and do another one and update everybody. So I really appreciate this. I'm glad we were able to get this information out there and answer some of these questions. So are there any last minute things you want to say, Todd?
I would just say that, yeah, this has the potential of being very turbulent, obviously, because we're in a hot market. We do have a new administration. They do like to spend money. They like to throw money at problems. Again, I'm not saying that's a good or a bad thing. It might be great for us. It might be bad for us, but it has the potential of changing things rapidly. So I'll let you know. We can jump on here and update everybody that's following, and then hopefully things work out. As far as turn times, because I know that we had talked about turn times later last year, with refinances and purchases and kind of what that was doing, setting expectations. Right now, our purchase turn times and underwriting is like 6 hours.
Wow.
It was over 6 days, not that long ago.
So really quick, what changed?
Well, we hired a bunch of people, and of course, we hired them just in time for the slow season. So they got caught up, and they're pumping these approvals out as fast as we can get the loans in. So it's pretty awesome. Our turn times are crazy fast right now. Definitely can close loans in 30 days, no problem.
Wow.
If not sooner. I mean, I've got refinances now that I'm getting done in almost 30 days, whereas before it was 60 to 90 days. So
Wow.
it's pretty awesome. So that is definitely not an issue going forward. I'm not going to say it's not going to get back there because who knows? We might see 1% interest rates. I mean, we just don't know, right? I mean, after last year, I don't even try and guess anymore. You know, I can forecast the best I can with the data I have, but crazy stuff happens every day.
Sure.
So we will definitely jump on here. We'll let everybody know, and that'll hopefully keep everybody with the eye on the prize, which is having their first home or their next home.
Absolutely. Thank you so much, Todd. I so appreciate your business partnership, your friendship, your knowledge, and your time. And everyone is very grateful, I'm sure, as they're seeing this and getting information from you, a very credible source and a very reliable one. So thank you again.
Thank you. Glad to be of assistance.
Well, I will see you next month unless something happens in between, and then I'll see you then.
All right. Sounds good.
Take care.
All right. You too.